Hey everyone, Couch Investor here with another video for today. Today, as you can see, we're here in a new type of setup screen because I think it's more better of an overview when I can look at the actual data live and talk to you that way, and that way you can also see me. As you can see here on the bottom, you can see this little couch potato. It's my mascot. This video will be part 3 of the cruise line series. We talked about Carnival, talked about Norwegian cruise line, and today we're going to talk about Royal Caribbean. So here is our small balance sheet. You can see the price at the moment was 29.33. As you can see here, the stock today lost 15% in value actually. Over the last 5 days, you can see here it went all the way to almost $50, and now it's all the way down to 29. That's why I always say don't panic buy. Don't try to time the market again. In my last video, I actually talked about whether you should wait or you should buy. If you didn't see it yet, go check it out. He talks about all the aspects that you should consider right now during this crazy market. Now, as you can see, the price went all the way down to what, $20, I think 19 something. Then it went back up in a couple of days to almost $50. So if you bought, you could have 2x your money, but now you almost lost half of it. So think of it as a long-term investment. If you're a trader, obviously you can trade, and you could have had a lot of fun in the last couple of days. But anyways, let's go here into the balance sheet. We did this with every cruise stock we analyzed, so if you didn't see it yet, you can go check it out as well. Also, you can go check out my other videos. I really appreciate the likes and the comments of you guys. I'm engaging with you, discussing about potential entries in stocks, etc. I really want to thank you all, and yeah, would love it if you can subscribe, like, and comment and engage. I love engaging with you guys, so I really appreciate it. Thank you. So let's get back into our RCL. As we said, the price is $29.33. PE is 3.44 at the moment. Dividend yields, it pays a dividend yield of 78 cents. Now, they might cut it because of, well, the debt that will be in. 5-year average PE, as always, very important for our calculation here at the bottom, is 18.6. The earnings, they met the earnings. They didn't beat it, but they met it, so it's fine. All-time highs of $135, which is insane. At the moment, you can, if you put $1,000 right now, if it goes back to all-time high, you have $5,000. Obviously, that's hypothetically if they can survive and if they will go back to their all-time highs. But let's see if they can by just looking at their numbers. So cash, they have $243 million, revenue almost $11 billion, cost of revenue $6 billion, gross profit of $4.88 billion, total operating expenses $2.80 billion, operating income, let's say $2 billion, 2.08. Now cash assets, obviously cash is the same as above. Receivables $306 million, inventories $162 million, prepaid expenses $428 million, which come as a total of $1.16 billion in cash assets. Non-cash assets, which is the most important in my view in this case now, property equipment, meaning their fleet and everything, 36.23. So Carnival is the largest, Royal Caribbean is second, and Norwegian Cruise Line is the smallest because they're actually not that old. Depreciation is not that much, is minus 10 billion. So total assets plus cash comes out at almost 29 billion, because I always leave out others, which are a couple of million of dollars. Liabilities, short term 12 months, long term more than 12 months. So short term 7.95 billion, long term 10.2 billion, which comes a total of 18.15, give or take a couple of $1 million or billion, no, million I think. Gross margin, the highest of the three, 45%, and operating margin 19%. The others were I think 15 and 18%, so it's not that bad. Liability breakdown. So short term is 2.62 billion, accounts payable 564 million, accrued liability 1.14 billion. Deferred revenue, I noticed that before it was written deferred liability, it's deferred revenue, 3.42 billion. So the total is 7.95 billion. Total minus the deferred one is 4.52. Now, again, we'll talk about why this is important, because this is in liability, but it's called revenue because, well, it's revenue that they still have to get. Like people pre-ordered their cruises but now had to cancel, get a refund. I don't know what's happening there, but there's one article that we will read about this. It's this one. Royal Caribbean offers 125% credit towards cruise planner purchases on cancelled sailings. So that will come in handy when you want to calculate this. Meaning people already paid, let's say for a 7-day trip, $1,000, let's say. The $1,000 cannot go into revenue because, well, they haven't paid the full price yet. Maybe it's like a prepayment credit card or whatever. Or like it's written here, they got a coupon or they got a refund or whatever. So that all comes here. That's why you have two totals. Now, stock repurchasing, I put it in red as always, because I think it's better for an investor if a company stops buying back their stock. Yes, sometimes it can drive up the price, but look at today. A lot of companies spent 300 million, 400 million, $500 million in stock repurchasing. That's why their cash pile is very minimal and cannot help them really in the current situation. Now, dividend payment, as we said, 78 cents, will probably get cut for a year or two. Current valuation is 6.45. Yesterday, it was 7.20 or 15 or something. Today, obviously, they lost 15% of their valuation, so that's the valuation now. Earnings 2019, 1.88 billion. Valuation versus previous earning is 3.43. Now, current reflection of earnings is 346 million. How do you do that? You just take the current valuation, divide it by the 5-year average PE, and you get this number. Now, why do you need this number? You can now take this number, divide it by the 1.88 billion, which is the earnings from last year. That will give you a percentage. It's I think 533%. Likely increase in the next couple of years if they can figure out the same way of operating of how they got the $1.88 billion, because now they only have here 346. If they can figure out how to get back to this $1.88 billion and you buy at the price now, which is $29 now, you will get, hypothetically, a 533% gain on your investment. Very bullish, but that's the calculation that we made in the last three videos. That's why it's a high risk, but very, very high rewards. Now let's go back to the article which made me talk about when we were at deferred revenue. So here it says that people that wanted to go on a Royal Caribbean cruise got offered 125% credit. That means if you pre-purchase drink packages, spa treatment, or anything else on Royal Caribbean cruise, and now your cruise is cancelled, obviously. Royal Caribbean will give you the option of onboard credit value of 125% of the total cruise planner purchases on your reservation. This actually means that they give you an incentive not to ask for a refund. Instead, they offer you free money. So at least they know that in the future you will still stay with your booking, and then they will start to collect their revenue again. Meaning they can start calculating, look, when Corona is over, we will be able to start sailing with X amount of passengers, and that they can show to investors, they can show in an earnings call. It's a very positive thing. Now, this new option is only for cruises canceled between April 11th and May 11th. I'm sure if the situation doesn't get better by end of April, it will get extended. Royal Caribbean is now giving guests the choice of to get a 100% refund, like we said, of the pre-purchase add-ons, or 120% in value onboard credit. Also, like in Carnival and Norwegian Cruise Line, if you own a minimum of $100 of 100 shares, you get onboard credit for free if you can prove that you have 100 shares. If you go on a cruise for a week or less, you get $50. If you go on a cruise for a week until 10 days or 12 days, you get $100. If you go more than 2 weeks, you get $250. That's per cabin in onboard credit, which is very useful to know because now the prices are so cheap of the stock. So if you're planning on going on cruise anytime in the next couple of years, bear that in mind. It's a very good perk to have. As we said, 125% future cruise credit. If you do not want to take advantage of the 125% onboard credit, you can use a self-service form to process the request of getting a full refund. Now, this for me is very positive news. I don't know what the numbers will be of the people that want a full refund or just the 125%, but I'm pretty sure a lot of people would take the 125% because they know in a year or two they would like to go on their cruise anyways on vacation. Let's go to the next article, which is a bit negative, but then we'll go back to a positive one, I promise. So as you can see, the cruise lines are not part of the $2 trillion bailout. Now, the reason why is this. None of the cruise lines, however, are registered as US businesses, nor are the majority of their employees Americans. One is in Bermuda, one is in Panama, and the other is in another tax-free entity. Now, so that makes sense why the people that made this bill, the stimulus package, decided not to give them a piece of the cake. And for me, it also makes sense. Why would the United States give these companies money if those companies won't even pay back taxes because, well, their entities are based in a non-US country? So that made sense, and I think I knew this already that it would happen, but a bit of a positive news here. Carnival Chief Executive Arnold Donald said, "We don't need a bailout in terms of giving us money. Getting a loan guarantee would be helpful." A lot of banks are also interested in getting a piece. I'll just read you out this thing here. Banks will want a piece of the pie. While the cruise industry may struggle mightily for the next few months, it's hard to imagine that the corona pandemic will lead to people never wanting to cruise again. That was my point. These are profitable companies that will eventually go back to making money. It seems likely that lenders will be willing to make that bet, helping the industry get back to sea. Now, nowadays, unlike in 2008 where banks were in trouble, I think nowadays the banks have a lot of cash, and if they can profit from this situation, I think this will be that. That's why the CEO of the chief executive Arnold Donald said that they would like a loan guarantee and not a bailout, meaning give them, I think, I don't know, $1 billion split 3 ways, or not 3 ways, but $1 billion each. And in the next 2 years, they will have to pay it back with, I don't know, a couple of percentage of interest. That's why also banks are very interested, because they still, I think, in my opinion, they sit on a pile of cash, and this would be an amazing opportunity for them to get some interest of it in the next couple of years. That makes me go to this article. Royal Caribbean secures a $2.2 billion credit line, bolstering its liquidity to battle coronavirus shutdown. Now, as you can see back here, their liabilities are obviously high, 18.25, and their cash is very, very low. Obviously, their total cash and assets is 10 billion more than their liabilities, but I doubt they will start selling all their fleet. That's why getting a credit line of $2.2 billion is amazing. Overall, all cruise lines, I think, have enough money, even if they get a bit in debt, they have enough money to survive a whole year just by their profits alone. Don't forget that because they are not, the camera is a bit wrong here. Don't forget that because they're not sailing, they are not paying employees, which means salaries do not get paid, which means they have less debt for that. Means they do not need cleaning staff, they do not need extra staff, they do not need food. A lot of people underestimate the amount of food there is on a cruise. It's crazy. All of that they would not need to pay for, I don't know, a couple of months, a year, who knows, which means they are saving up some expenses. Obviously there's no revenue coming in, but there are no expenses also going out. Obviously maintenance of ships, I think that would still be an expense, but still food and staff, except if they can pay for their staff to be at home, I don't know. That might be nice, but not a lot of companies are doing this at the moment. So let's read here. Royal Caribbean stock was up more than 10% early Monday. That was last week. Well, because they secured a $2.2 billion credit facility to bolster their liquidity, which is great. Like we said, it's the second largest US cruise operator. They still call it US Cruise, but it's not really a US cruise operator. Said it now has more than $3.6 billion of liquidity. That includes cash deposits, like I said, and existing undrawn revolving credit lines. Like we said, the stock was at $26 and changed at around 1:30 p.m. Okay, that's not important for us. All right, this is a comment from the CFO. This is a period of unprecedented disruption for the cruise industry, obviously. We continue to take decisive action to protect the company's financial and liquidity position as they enable us to keep focused. There's a mistake here. On our guests, our crew, and our long-term plans. This is why I would potentially risk and buy. The stock is down about 80% year to date compared with the S&P 500, who's not, I think it's still minus 30% for the year. Now, let's go back to this page. For me, it's a very clear decision. You have to think it like that. Do you think Royal Caribbean will go bankrupt in the next year? If so, obviously, don't touch it. Go put your money in another company. If you think that in the next 5 years, you personally will be able to go on a cruise of Royal Caribbean, then yes, I would take a risk and put an X amount of dollars buy an X amount of shares of this company. Because like we said, you have a potential of 500 plus 500% gains in the next couple of years if this company survive. And by the looks of it, it will survive. Most of them have some liquidity, most of them have some capabilities to survive this. Also, I think before end of the year, 2020 that is, cruises will start operating again, or maybe accept bookings. By accepting bookings, they can again add to their deferred revenue, but at least that number will start growing, and in the future their balance sheets might look a bit better. Now that will conclude this part of the series. Like I said, we made 3 parts: Carnival Cruise, Norwegian Cruise Line, and now Royal Caribbean. All the videos will be, I think, up here or up there, I don't know. I will do a next series part, also 3 part, regarding airlines. I think it will be Delta, maybe American Airlines, and then for the Canadians out there, Air Canada, because I think it's a very stable company. If there are any other stocks you want me to review or discuss with me personally, leave it down in the comments below. Again, I appreciate everyone liking the video, subscribing, engaging with me. Really helps a lot, especially in these times, for well, the enthusiasm of making these videos. So yeah, thanks again. Don't forget to like, comment, subscribe. See you all in the next video. Bye bye.